In 2016, we are going to see more changes to how a customer wants to interact with a financial institution. That means that they will interact with a financial institution using more digital channels and a lot more requirements for personalization, a lot of requirements for being in context. That's going to be a huge driver of change for the industry. What has been very interesting is that if you speak to 100 people about what their digital strategy is, they will probably come up with 100 different definitions of what their digital strategy is. At IDC Financial Insights, we have been able to dissect all these digital strategies of the banks and other financial institutions that we've been speaking to, and ultimately we come up with the 4 key elements of what constitutes digital. And this would be an increasingly digital customer base, a lot of deployments on mobile, a lot of use of data, and finally integration of all financial services with the lifestyle of customers. So despite different definitions, there are really just 4 key elements of digital financial services. There has been a great change in the way that a customer wants to transact and interact with a bank. Definitely they're becoming more digital. They're using a lot of their mobile devices as well as using a lot of the virtual and new channels that are being launched by banks. There's also access to a lot of these very creative forms and ways of doing payments, which I think has been a very great driver of change for how a bank wants to serve customers. Also, there has been a lot of infrastructure improvements in the region. If you look at the cost and availability of bandwidth, there is also fewer issues with regard to the latency of technology in even the developing markets in Asia. So at least from the infrastructure side and the ability of the market to support more digital transactions, there has been also quite a bit of improvement. If a lot of these banks are still thinking about going digital, I think that the train has really left the station there. It's actually very late for them to be still thinking about their digital strategy at this point in time. They will face a lot of competition by banks who have really gotten the message that digital is the way to go, and they have probably been on this digital journey for the past 2 years. Increasingly, a lot of the fintech companies, the startup companies that are intent to encroach on the traditional business of financial services have also been able to hire very good people away from banks. So increasingly for banks that are still finding their way or defining their journey for digital, it's going to be a lot more expensive and very difficult as well. The great opportunity would be in 3 areas. First would be the growth of the use of analytics in the way that we deal with customers, particularly in how we make decisions with regard to credit. And a lot of these analytics will actually be done on the social media information that one can gather about their customers, whether it's the activity rates on social media or the network of peers and friends that a person has in his social media circle. A lot of analytics can be gained from that, and a lot of the startups as well as the banks are really investigating how to analyze social media information and integrate that with the decisions that they would have to make with regard to credit decisions. Also, if you're looking at the growth of mobile, we actually see that peer-to-peer will receive a lot of attention as well. There are a lot of case studies that banks can use in order for them to make a determination about where they want to go with peer-to-peer lending, also including in their discussion how they're going to build a business around crowdfunding. And then lastly, I think Bitcoin as well as the blockchain technology has also received quite a bit of attention. From the regulatory side, it has been an interesting conversation because regulators have said this has a potential to grow, especially blockchain technology with underpins a lot of the virtual currency conversations in the past. So these 3 areas have been quite interesting, and I think we expect them to grow in 2016. The banks, regardless of size, regardless of involvement in specific markets in the region, really have to become more digital, because digital is where your customer actually lives. Your customer wants to interact with you and transact with you using digital channels as well as digital means. At the same time, there are opportunities that banks can use digital for bringing down cost to serve. You cannot build branch networks as quickly or as cheaply as you can build perhaps a mobile application that can get you access to the customer or huge customer bases in Asia very quickly. Definitely mobile is going to be continuing a growth momentum that we have seen for quite some time. A lot of these banks will focus on mobile micro app, being able to deliver specific functionalities or microservices to the consumer that will be a very strong strong area of focus. There will be a lot of focus on analytics as well, and being able to understand the customer as a segment of one, and being able to interact with the customer as just one specific person, not part of a customer segment or not part of a huge portfolio of a customer base that a bank has to serve.